Let's talk about Nikkei and the Japanese yen correlation. In this video, I'm going to talk about correlation in the Forex markets, and I'm going to use the Japanese Nikkei index together with a few Japanese yen cross pairs and exotics. So it's going to take some time to go over this, but I'm trying to be quite detailed in the explanation. Okay, so probably if you are trading Forex, you may have realized that today the market gapped up. Okay, here, as you can see, this is Nikkei futures. You can use CFDs like JP 225 from Forex.com, IC markets. The imbalance is more or less the same everywhere. Okay, so there is a huge rally over there, and this gap makes this level of demand on the daily, because this is the daily time frame here. I'm going to be using the daily time frame here on the right side and the weekly time frame on the left, and sometimes I'm going to switch to the smaller time frames like the 4 hour. Okay, so this usually, well, we do not, supply and demand does not require to pay attention to news events or anything, unless obviously you are trading the smaller time frames for intraday and scalping, where these gaps could obviously take you out of your position. And or if you are trading intraday and scalping, obviously if there are news events important for the Nikkei or the Japanese yen, you should stay out a few hours before the news event, during the news event, and after the event. Just let the storm pass. So that's something that you should pay attention to, and it's quite simple to understand. Okay, so correlation works. I'm going to explain a little bit about it, but first I'm going to go over several Japanese yen cross pairs and the fact that we have new strong imbalances playing out based on the strength of very bigger time frame imbalances that were and are still in control. Like for example, on the Nikkei, we have these demand level in the 3 months, which is playing out really well. And I mentioned about this a few months ago, and this is helping the Nikkei rally and rally and rally. And as the Nikkei gets stronger, the Japanese yen gets weaker. That's the correlation usually that happens with the Japanese yen and the Nikkei. And we're going to be talking about that. So this is what we have on Nikkei. So we have obviously a long bias. And this gap over here happened overnight when the market opened today, the 6th of October or 5th, Sunday, Monday, October 2025. And this is probably, I didn't know why that gap happened, because it is very difficult to see huge gaps on the Nikkei index and the Japanese cross pair. So I saw so many this morning that I just Googled what happened in Japan this week. And then I learned that Sanae Takaichi is the new leader in Japan. So it's something that has to do with politicians. And this is why it looks like this woman is going to continue what the predecessor was doing. So like the markets or investors were very happy with it. And then you could see that in this gap. Okay, that's what I learned. So the yen pairs, like the dollar yen and the euro yen, pound yen, and the others, all gapped like they had no too much, or didn't have too much sake to drink. So they rally really strongly. So here is the question that every trader should ask: what's the real link, okay, between the Nikkei index and the yen, the Japanese yen, and when does that correlation stop working? Okay, because correlations work until they stop working, and it's not a scientific fact. That it will happen always the same way. I've seen the Japanese yen dropping and then the Nikkei dropping too. So, but usually they work hand in hand. Okay, so let's break it down using pure price action and supply and demand imbalances. No fundamentals, no news, no lagging indicators. We just do that. Okay. But I started with the fact that there is a new, I don't know if they call it president or prime minister, because they have the emperor, but I don't think that changes too much. So Sanae Takaichi is the new leader, and it looks like it's a woman, because Sanae sounds like a woman, but I might be wrong. And this woman is continuing her predecessor's policies. Okay, So usually when the Nikkei rallies, okay, the yen crashes. So understanding correlation between Japanese stock index and the yen crosses is very important for trading Forex, for both short-term, intraday, swing, long-term, scalping, whatever you want to do. Okay, so when you trade Japanese yen, you are not just trading a currency. Let's take a look, for example, the first one that comes to my mind, the euro dollar. Sorry, the euro yen. Okay, so on the euro yen, this is what we have on the daily, and this is what we have on the weekly. We have a clear uptrend. It gapped up to, okay, and created a new imbalance here on the daily. We're gonna go over this little by little, okay? But what I was saying is that when you trade the Japanese yen, you are not just trading a currency. You are trading the Japan's heartbeat. And when that heartbeat skips, like with this bullish gap on the daily time frame on the Japanese yen, okay? We could draw even wider like that, okay? It takes both the Nikkei index. Let me do this. Let me not synchronize the symbols so I can have here the Nikkei futures. Okay, so so they both rally obviously because the Japanese yen, as you already know, is on the right side of the ticker. So if price rallies, it means that the euro gets stronger against the Japanese yen. So a rally in the Nikkei means a weakness, or the yen, because on the right side the euro is getting stronger and the yen is getting weaker. So rallying on this bullish gap means that the yen is weakening and the euro is getting stronger, and this follows the correlation. We can see on the daily time frame here again, okay, we have a very similar imbalance on the daily, very similar to the one on the daily. So they are highly correlated, both the Nikkei index and the euro yen. So what happens is that when this happens on the Nikkei, then it is automatically transferred, let's say, to the other Japanese cross pairs in the Forex market. So this week, what happened is that the ruling party in Japan elected Sanae Takaichi as the new leader, and that's a move that promises, quote unquote, a continuation of what the previous, I think it was called Abe's or whatever, Abe's market-friendly policies. So it looks like what the news say. I don't follow the news, but I learned about this one because I saw this huge gap, and that doesn't happen, as you can see on the euro yen, never. Okay, that doesn't happen. So I said, why is this happening? Well, news affect the market, obviously, and the sentiment of the market participants, and sometimes it's like a nonsense. So good news and the price drops, and bad news, price rallies. It's all about supply and demand. And what happens here is that we have a bullish gap, and bullish gaps tend to be filled. So obviously buying after a very strong rally doesn't make sense, okay, when we are expecting this. So this is all based on euphoria, okay, of the market, based on what happened with the new prime minister, or whatever you want to call it. Okay, so the major yen cross pairs, we're going to look at quite a few of them. Okay, all of them gapped up aggressively based on these newly elected Sanae Takaichi, okay, as their leader in Japan. And it is creating new daily demand levels and also 4-hour demand levels. If you go to the 4-hour right there, that's the gap we are expecting to be filled. It looks like it's not going to happen, okay, because we now have like a bullishing of the bottom. We can see very strong rally, and now it's trying to recover or pull back to the origin of that move, because gaps tend to be filled. Okay, so the alert should be set there for us to wait for the price to drop down there, when we can start thinking of buying, because we have a weekly uptrend on the euro yen. We have a daily uptrend on the euro yen cross pair, Forex cross pair. We also have a daily and a weekly uptrend on Nikkei futures, CFDs, and everything. So everything's bullish, but buying after a very strong rally doesn't make sense. Okay, we need to wait. Now it's overextended in the smaller time frames. We need to wait for the pullback, which is probably, hopefully, it will happen in the next few days. Otherwise, it probably will sort of like do this and then rally again, create a new imbalance. Okay, so what is exactly going on here? Because the Nikkei, how does the Forex correlation work between the Nikkei and the Japanese yen cross pairs? Because the Nikkei 225 that tracks the best 225 stocks in Japan, and the Japanese yen often move in opposite directions. So when the Japanese stocks rise, okay, the yen tends to weaken. And that sort of makes sense when you pay attention to what the Japanese economy is all about. They are all about technology and exports. Okay, Sony and many other companies. So they are exporting all kind of technology. So obviously a very strong yen means that exports will suffer because the Japanese yen will be very expensive to buy. So it makes sense that the Nikkei gets stronger because the economy in Japan, all the major companies are making a lot of profit, but it seems that most of them are exporting. Then they need a, let's say that they need, that's what I understand. Okay, I'm not an analyst. Okay, and I don't want to be a fundamental analyst, but it makes sense that if you want to export much and better, you want a weaker yen, and that's exactly what's going on. Okay, so why? Because the global investors move money in and out of Japan depending on risk appetite and what they are interested in. Obviously, when they are confident, they buy Japanese equities. The Nikkei goes up, okay, on both the daily and the weekly, and it's being long term. Okay, long term. So the Nikkei goes up and they sell yen to buy those stocks. So they sell the yen, okay, buy euro if they are in Europe, to buy stocks in the Japanese market. So the yen has to weaken in order for the Japanese equities to go up. So when fear returns, the dump of stocks and buy back the yen strengthens. So it's all the opposite. When this happens, this happens. But it looks like they are both going in the same direction. But remember that Japanese yen is on the right side of the equation of the ticker. It means that if price rallies, Japanese yen gets weaker. As the Nikkei, when it rallies, it gets stronger. Okay, it's the opposite. So here's the catch. So and this is where traders probably lose money. Correlation works until it doesn't. It's not an exact science, and that's what I said before, where price action and supply and demand come into play. Okay, there is a play between price action and supply and demand, and you need to understand that too. Usually correlation works until it doesn't work. So using the supply and demand perspective, we forget fundamentals for the bigger time frames. Obviously, as I said before, we use fundamentals for the smaller time frames. We know that Sanae Takaichi is the new elected prime minister, or governor, whatever they are called in Japan. So it's good for the economy, blah, 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 etc., etc. So that's the fundamental. We don't care about that. We just care that it created, we know that Nikkei was in an uptrend. So this gap, I mean, we're not going to sell. And we're not going to sell here, okay? It just was a sell-off prior to the election, probably, I don't know. Remember there was a weekly demand level over there that we expected its elimination somewhere from there, yes. It was in control and helping the EURJPY drop. And then suddenly this news from Sanae Takaichi elected, well, the market went euphoric and we have the gap and the weekly supply level eliminated on the EURJPY. Okay, so today's gaps on the dollar versus the Japanese yen forex cross pair, the euro versus Japanese yen cross pair, the pound yen, the CAD yen, the Aussie yen, so many others like the Mexican peso, Japanese yen, the South African rand, all of them show that fresh demand levels of demand have been created on the daily and the 4 hour, with a daily and a 4 hour uptrend on both time frames. So, but I think now it's too late to buy. Okay? These new imbalances are institutional footprints on Forex, on the Japanese cross-pair Forex market, areas where professional traders place massive buy orders in reaction to the Nikkei rally and all this situation that is going on with the government in Japan. So from here, it's not about chasing price. You we should not chase price. That means, okay, I'm going to miss this rally. This is going to continue to rallying for weeks and months. Probably, okay, but if you buy here, where do you protect? You protect here if we are expecting the bullish gap to be filled. No, the protection should be here. Stop loss here. So a trade from here to there, that makes no sense. It's a huge trade. So price will need to move a lot to make any money. So we need to wait for other signals, okay, for a bearish impulse to reach the demand or create new demand levels, etc., etc. Okay, or if you're using other strategy, obviously it's bullish, but buying now after a very strong rally is not a good idea. It's not about chasing price, it's about waiting patiently for a pullback to those new demand levels, which I have shared with you so many times, and they play out. So it's just about being patient and waiting and waiting. Trading is all about waiting. It's not about the strategy. Any Forex trading strategy or intraday Forex strategy, swing Forex strategy, long-term Forex strategy, it doesn't matter. There are hundreds that will work. You just have to focus on it and work on it for a very long period of time until you make it work. But it's all about patience and controlling your emotions and your thoughts. Okay? So it's like the best traders are not the fastest clickers, they are the best waiters. Okay, so the major Japanese yen cross pair, I'm going to go over quite a few of them now. We have new strong imbalances on the major ones, so all these are showing aligned demand levels, beautiful sample of multi-market correlation between the Nikkei and the yen pairs. So if we take a look, this is the euro yen. As you remember, we have like a new level of demand there on the 4 hour, which we're expecting for price to drop down there. So if we make this to, let's say 6, yeah, I'm going to use, okay, here I'm going to use the pound yen, Japanese yen. So on this one, you can see we also have a great level of demand on the daily, very strong with a back gap there. And if we take a look at the 4 hour, well, the 4 hour level is like there. So we could just make the level a bit wider to cover the 4 hour. So if price drops on there, entry here, stop loss underneath. So that's what we are waiting. That could take a few days, and the longer it takes, the better. So this is the Japanese yen versus the British pound cross pair. So on the right side, I'm going to use, for example, the dollar versus the Japanese yen. Okay. So here I'm going to use the daily time frame. Okay. And again, we have that level. Okay. We still have this daily level of supply in control that has been tested, and we are expecting its elimination. So probably this will happen. It will continue to happen for a few days, and then if it continues to rally, then it will create a new level of demand. Or if it drops down there, that's where we should be buying. And this is like a long-term type of trade that is happening on the weekly and the monthly and everything. Okay, we have like a bullish bias with this demand level here in control from a few months ago. So we have new levels of demand regardless of what's going on with Sanae. Sanae, was it like that? Takaichi? Yeah, I think it was Sanae Takaichi. Yeah, I think it's Sanae. Yeah, Sanae Takaichi. Whatever happened with her, and continuing the government and the policies from the previous minister or prime minister in Japan. Regardless of that, we had a long-term long bias on the dollar versus the yen too. And here I'm going to use, for example, I don't know, the Japanese yen. So let's use the Kiwi, New Zealand dollar versus the yen. We have here the weekly rallying again, and look at the strength of this move too. Okay, with a gap again, and we take a look at the 4 hour time frame. The imbalance is right there. So it looks like for now, since the New York market just opened, and probably it will follow the euphoria, okay, the positiveness of these news, and then it will continue rallying, and then price will get overstanding and it will drop or create new levels of demand. That's what we are waiting for. Okay, so here on the right side, I'm going to use another dollar cross pair. Could be anything, but I'm going to use, for example, the Aussie versus the yen. And the Aussie versus the yen, we also have another strong level of demand here on the daily with the gap. And we take a look at the 4-hour time frame. The 4-hour demand level is there, made of 5 candles, all these 5. It's inside the daily. Well, that's fine. So the alert should be set here. And we are, like I said, well, this is the dollar yen. This is the Canadian Aussie versus the Japanese yen. And on the daily, we also have a daily uptrend, okay, with this demand level, previous demand level that played out. So this looks like very similar, okay. So price rally is very strong rally, very strong rally. This one is even a stronger rally because the bullish gap, a gap is the strongest shape of an imbalance. So this huge rally happens. So this huge rally happens in the same area, okay? It's like price drops to the same area, and when it drops down there, the news happen about Sanae Takaichi, minister, and then price rallies on the Aussie versus Japanese yen cross pair. So it creates a new swing Forex demand level on the daily as a reaction to the previous one. So here we were, you might be thinking, oh wow, I'm gonna miss the trade, I'm gonna miss out this trade, so I should buy a breakout, whatever strategy, breakout Forex strategies that you use, okay? And then you lose. Why? Well, because this was like overextended, a very strong rally. After a price rallies a lot, we need to wait. How much do we have to wait? For 5 bars, 5, 6, for a week, because Forex market opens for 5 days a week, unless there's holidays, and everywhere in the world, which that doesn't happen. So there's always one day, maybe the first day of the year, maybe a couple more. So wait 5 days and it drops. So price rallies even stronger than this. So buying here, no, now we need to wait for price to show us weakness until price drops there where we can buy. So this is for the Aussie yen. When we take a look at all these cross pairs, okay, including the daily on the Nikkei index. Remember, I talked about correlation, okay? This video is about correlation between the Nikkei index, the economy of Japan, and how the equity market is related to the yen for exports and everything. So if we switch to the daily on all the time frames, we have a very similar imbalance on the euro yen, the New Zealand dollar versus Japanese yen, the Aussie dollar versus Japanese yen, the dollar versus Japanese yen cross pair, and also on the Japanese yen versus the British pound. And if I switch to the Canadian dollar versus the Japanese yen cross pair, we are going to see exactly the same, a bullish gap over there. And if I continue adding more Forex cross pairs to the equation, you will see that almost all of them are highly correlated and showing the same bullish gap based on this news event, global news event on Japan that is affecting the global markets, because it's positive for the Nikkei, for Japanese economy. So just remember that the Nikkei yen correlation is a fantastic compass, let's say, but it's not GPS accurate, let's say. When both the Nikkei here on the daily and the weekly, okay, and the yen cross pairs, dollar yen, euro yen, kiwi yen, pound yen, etc., when all of them move in the same direction, it's usually a short-term distortion that soon realigns. So the key is not to predict the next news headline, because we don't know what's going to happen and everything is manipulated. So it is to react to these imbalances and be patient enough to wait for the pullback, because trading is all about patience. So it is, like I said, wait for price to drop to react to these imbalances that news left behind. Supply and demand imbalances are like the, let's say, the X-ray of market emotions, the footprint of big money. So the stronger the impulse, bullish or bearish, the higher the probability that the pullback is going to happen, because it's like having a spring stretched and you just cannot hold it for long, and then you need to release it on one of the ends, and then it snaps back to the original position. And that happens with correlation and with overextension in the Forex market. When they align across markets like this, it's usually time to get ready, but not to rush. So buying now is rushing, waiting, it's not rushing. Patience, always patience. That's the secret sauce. Okay, so hopefully these pullbacks will happen, or new demand levels will happen, and hopefully these explanation about correlation in Forex and Nikkei index in Japan and the Japanese yen cross pairs, and how to avoid these news when you are trading smaller time frames. Hopefully this will help, and let's see if the pullback happens or new demand levels are created. If you like this video, click on the like button or subscribe to my channel, and I will be glad to keep on updating you on new analysis and new price action tips on supply and demand. Have a great day.